Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So it's Thursday. It was a big day on Wall Street. Not many clues that was going to happen, especially on yesterday's close. That's why some traders are a little frustrated because one day to the next, sometimes you're neutral, sometimes neutral to negative, sometimes neutral to positive. But the bottom line is if you're kind of light and you have your levels and your pivots and your sectors in front of you with a plan, you could react pretty fast. Because I know for me, I came in short Apple and I came in short the spiders, and I was a little negative yesterday because we closed pretty much on the lows of the day after failing the resistance. So I was like, hey, maybe we get downside follow through. Today, futures were up. I was like, oh, I'm like, I bet you, people are going to think you could just sell off the market, again like yesterday, and then they trap some shorts. It adds fuel to the buying, and maybe we actually hold up today. So I was like, you know what, I'm not going to fight this. Going to give it maybe 5, 10, 15 minutes and then just cover and maybe flip, because yesterday I was thinking really long and wound up salvaging the day versus being miserable and upset at the world. So anyway, you look at the chart of the S&P cash. Actually, now I have a longer term chart up here, so let's see. This is that longer term trend line, and then here, here's basically still the trend line that we kind of broke there. At this particular point, you could draw this, okay, which has kind of been in control that we're poking our head above. So you have a whole new, pretty much symmetrical triangle that we're poking our nose above. It's pretty cute. It's doing it in front of the French elections. There's nothing you could do about it. But last time we poked our nose above here, when Trump was elected, we had commitment to it. You saw a new trend above the 8 and 21 day until we broke right there. Then we tested the 50-day, came to the line and failed. Then we retested this, had a nice double bottom, and now it looks like we're poking our head above. So the question is, can we stay above? Can we build on it? We shall see. At this point, I think being short is a little scarier than being long, if that makes any sense. We closed above this. There was some buy interest. You have tech near all-time highs. You still have things acting pretty well. Last time we broke above here was a nice trade. Then above here was a nice trade. And now we're trying to get back above the 8 and 21 day, which we haven't been really above for a little while. So that got me long. So we'll see what happens tomorrow. IWM, which sometimes gives clues, it also poked its head above this small descending trend line, and now if it were to stay above this, perhaps it helps build and goes back towards the highs. This long-term support level held, and now we're above moving averages, so it would give you at least some thoughts that maybe there is accumulation, you have more of a move to the upside. So we shall see. It was definitely in a consolidation phase for quite some time since it ignited here. So let's talk the banks. I've had a few different segments on CNBC about the banks. First was trying to play that bounce about a month ago, and then whether or not earlier in the week we're going to be able to hold big support. You either have a big support or you have a neckline. When it becomes a neckline is when you break below the neckline and you hold below it, and then patterns trigger. If you hold that, the reason why it is a neckline is because there's a lot of support there. So that's why you watch it. So we talked about being in Bank of America versus 22 and watching the XLF and being in it, or just avoiding it until it proves that it could hold 23. So anyway, you look at the XLF, all in all, here you go. This is the big term or bigger term support that we've been talking about. Today, what did it do? Step one, reclaim the 8-day. So if you were short, maybe it covered there, or if you were flat looking for a potential day trade, this was it. And now the next potential step is taking back the 21-day, and then this is when a lot of us played it before into this resistance. So here's your 50-day up there. Doesn't mean it's a leader. It doesn't mean it's off to new highs. All it means is that it held support and gave you a little bit of a bounce today if you happen to want to day trade it. And yes, that's what we do. We prop trade, day trade. Markets are open in the afternoon and the morning, and that's when most people, no matter what, trade. Sometimes it's good for a few days. Sometimes it's every other day. You never know, depending on the market. But as of now, at least a little bit out of the danger zone. Where I made a lot of my money today for the banks was Wells Fargo. Wells Fargo, I've been playing it since the insider buying. I did not come in long Wells Fargo. Basically, we had it on this day, made some money. And then actually today, when there was news that Buffett confirmed something about the board, it was only up a little bit, was going to take out this pivot. I'm like, let's buy it for some cash flow. And I didn't take it home, but it was a day trade. Day trades happen. You know, if you're not stuck in these things for when they break their upper level like it did here, or when it breaks another level like it did there, you could actively approach it. And now who knows, maybe it tries to come back to here, so there's still a bit more room. I also bought Bank of America. You know I said I wasn't long it a few days ago, but here we are. There's your chart. There's your big support. If you're trading adverse this spot and never broke, if you're looking for a reason to get in, well, XLF was down on support. This one held above support, and now this is already near the 21 days, so it looks as if perhaps, market wants to go up a little bit more. There's more room. So it's something you could be in or something you avoid. But for now, a little less of a short unless, you're giving it up to the 50-day. Or if you were looking for a pattern to trigger, if you're looking for this to all of a sudden trigger a head and shoulders pattern and help bring down the market, well, it hasn't happened yet. If you were anticipating it to happen, you know what? You're probably feeling it a little bit. You got to wait for it to happen and confirm it happening, and then, you jump in. It never did that. So at this point, maybe there's a little bit more room. We got to see what the market does. The Qs, not giving you bear market clues, right? Qs actually held the 50-day right here. And now it's back above the 21-day near all-time high. So if there's something to gravitate towards, it's the Qs. So now as far as tech, listen, I went home short Apple yesterday. And I was like, oh, my God, I hate shorting Apple. We've had a big move from the beginning of the year to the 144 Redler report target. It actually closed below 141. To me, was a little small active pivot. I'm like, hey, if we're going to open down tomorrow, this is in the cards. All of a sudden, walked in, it was up 60, 70 cents. I'm like, you know what? I'm not giving Apple to 142.10 in the morning call. I gave you a strategy on how to cover and maybe how to get long. Well, here is Apple. Apple now cleared, this small descending channel. So I went from short to long and closed pretty strong. So now we'll see if it could help the overall market. Lots of different ways to play Apple. One was after the earnings gap and it held in here. Another one was, in this red dog reversal that came back up, and then when it cleared this spot. Another one was when it hit here and then cleared that spot. And now we'll see if this has some traction. But, yesterday it did look as if perhaps it was vulnerable. Look right there. And I was shorted overnight. Well, I was red dog short something overnight. You guys think I can't short things? I don't like to, because obviously the bull market does win. Because failed at resistance, came down, closed below this little 4-day pivot, so I went out short. But you know what? Got to be quick. That's why we say quick feet. All of a sudden engulf that day with more power. So now we'll figure out if there's any, continuation to that. Amazon's not doing a whole hell of a lot, hanging in there. Say as long as Amazon holds above this spot here, it looks constructive for a move to highs if the market wants to do that. Here is the last breakout, kind of hanging in there. Retested the 21-day, gave even a short trade here. Remember the topping tail? Some of you guys went home short, added below this low, and then you had to move to the 8-day, which is a 3-day down move. You don't get that often. Why would you not cover some Amazon? And then you even had a lower high bounce, came into the 21-day. Why not try that? And now you'll see if it goes sideways and it helps the overall tape. Facebook really strong. Why is Facebook strong? Hey, look at that. Never went down to the 50-day. Took back the 8 and 21-day here. Talked about it holding that level, the top half of it, and it did. And now look, it's closing at all-time highs. Congratulations to those invested in Facebook and those trading it using different methods. Day one didn't give you a day two, but it digested well, and now look at it. Netflix is kind of in the penalty box. I don't think you pay up for it. It did hold this spot here. I would just let it sit. It's below the moving averages. It needs time to rebuild. It failed at this pivot after earnings. It's come a long way, so I would just kind of avoid it for now, even though it did hold that. Oh, back to the bank. Somebody asked me about Goldman Sachs. Goldman Sachs, by the way, yes, I said, you know what? It could be a compelling buy, into the, the 195-ish area, this spot, into the 204, which was really the 200-day right here and here. Well, as of now, it did not get there yet. So everyone's like, you still think it can go to 195 to 205, whatever? I'm like, well, at this point, short term, this is your new pivot. This is your pivot to trading against at 213.60, and perhaps it wants to fill this gap. If it were to come up here, do a topping tail and fail, hey, you know what? It looks bearish. At this point, below the 50-day, below the 20, all these, it's just oversold, and it's trying to, pack and fill and do some, some trading, and here you go. If it wants to get into this gap, it can. If you went long today when it took out yesterday's high, it's an active cash flow trade. You didn't have to go home long, and you could have just made some money. But overall, all you know is this, with the 200 days, it's below all moving averages. So if you were tactical when it broke this upper area, you know what? You actually have the luxury of playing things like this. Even though it doesn't look like much, it could equal to money. Some of you guys are in the video. I'm not. It held this 95. Remember the wake-up call or the wake-up day? And this was right here. Okay, and then what did it do? It held on Tuesday, and now it's working its way back. I don't think it's that compelling after 3 up days, but it doesn't mean it's a short either yet. Here was your breakout failure after earnings. This was when we got caught overnight. Remember that big downgrade? That sucked. Excuse my French. And now maybe it comes back up. But you could be tactical. I don't know why, but I bought a small ACIA. Makes no sense except for the fact that it had its first green day in a while, took out a prior high, so I'm like, hey, let me buy a little bit just to have some. Last time, these guys were like, look at Twilo, it could give you some kind of bounce play. I kind of ignored it, okay, and, I'm not saying it was a barn burner move, but Twilo gave you a gap up, held it, and then this is when, I just was like, I'm not going to buy it. I'm a little just tired of this. I don't even want to look at it, and here it went, 5 points. So, just for something to do. What else? What's gold doing real quickly? Gold is holding the 8-day for now. If you're a gold bug or a gold trader, this indice or ETF took out the lower pivot here, reclaimed all the moving averages here, and then gave you another clean move here. And now in order for it to stay actively constructive, probably needs to hold that spot. And as of today, it did. Maybe it creates another new flag for you to trade against, and maybe it doesn't. Either way, it's been above the 8 and 21 day, which is something you want to be long and not short. I reclaimed that all right around here. Okay, and that's that. So for today, market had a push. Everyone's trying to figure out why did it happen. I think you had a lot of reasons to sell it this week. It didn't go down. So all of a sudden when you bounce and shorts are caught from yesterday and people are underinvested and you start pushing through levels that are rubber match spots, the algos go wild. Some things are better than others. Obviously, not all stocks are created equal, and we still have big earnings next week. You have a big election this weekend. Hopefully tomorrow we get a little upside follow-through, and then we get to figure out what we want to do into the weekend, which in my opinion is a binary event. So the way you trade options around earnings is how I would suggest you do it around the elections. Okay, not be all in short or all in long. I would be careful because the last thing you want to do is be wrong, blow up your account when there's lots more opportunities out there and there's no reason to put yourself out there as an active trader. If you're a long-term investor, stay the course. Every month, 401k, 529, every month, monthly funds. This weekend is not going to change that. So don't let people around you change your long-term outlook, but your short-term process is something different. Have a good night.